What is good, everybody? What's good, boys? So what I'm going to do is I'm going to break down NASDAQ NQ. This is the daily level that I've been looking at and I've been posting on YouTube, on Instagram. This is a major key level of demand. This was pretty much the last external major low that caused this rally up. So I'm expecting price to really react heavily off this zone. Now, given it's already done that, and I posted this in my group beforehand, letting everybody know. This is me just breaking it down right now. Now, what I'm gonna do is I'm gonna show a trade that my team caught that I showed live for them. I'm gonna delete all of this and just break it down in real time for you guys, so it's kind of easier to watch, gain the concept of what I'm doing, what I'm teaching, and how you can implement it in your own strategy, in your own system, and start winning trades. That's what you want to do. You want to limit your losses and win more. This is how you do it, right? So it's pretty much a top-down analysis. I usually don't look at the daily, but in this instance, with this type of major zone, I'm looking at the daily for external bias and overall bias, right? I am just looking to rip longs. With that being said, we're going to jump right into this. Now, this was on Tuesday, so let's play out a little bit and show you guys what I saw, why I showed my team this trade and this markup and this analysis, and why they ended up taking it and actually winning, okay? So first and foremost, what we had was we started rating these lows previously and actually tapping into this daily demand. Now, a lot of people are going to get stopped out early because they're just buying aggressively off this level. It's a daily demand level. You do not want to buy aggressively off this zone. You want to wait for confirmation, and not a lot of people do that. So when I see a higher time frame zone like this, I wait for confirmation. Now, what we have above is a break structure. We broke the highs. So now what we're looking at right here is we're looking at the low and we're looking at the high that pushed past previous highs. And that's literally it. This low pushed past this high, forming this new major high right here, coming out of the demand, printing confirmation entries, right? So we're gonna break this down even more and show you guys how you can do this for yourself. Now, what we have right here is a fake low. Some of you might be buying off this level of demand right here because it's the demand that pushed past the high, right? That is invalid, it's incorrect because you're too extended. You're too extended. The base and the rally of this move was from this low right here in this demand. So you don't want to be targeting this if we've yet to even mitigate this low that caused this bullish leg up printing past this previous high. So with that being said, we're going to play this out, see what happens. We tap into it, we fake them out, we wick it, and then we wick all the sellers sitting up here, taking out all their orders. So it's accumulation. We distribute down into the zone, if you want to say that. This is all the accumulation up here. Top side, bottom side, they both get stopped out. And as you can see, we take out the early buyers right here. Unfortunately, we come down, and now what we do is we fulfill this imbalance. Gaps need to get filled. There's a gap right here, but it's not major. This is the major gap. We need to come down to fill this imbalance, FVG, gap, whatever you want to call it, to then continue back up to the highs. That being said, what we need to do is we need to mark out our level of demand. This is our level of demand right here. I'm going to mark this out red so it's easier to see. This is our demand. And all we do is we place our entry at the beginning of the demand. We put our stop loss at the low. Always let your stop breathe. I see some people marking up demands like this and putting their stop here. Okay, well, let's tap into the zone. Let's see what happens. It might actually react off it, which it did. This is a terrible example, but let your stop loss breathe. Stop going for these crazy RRs and just go for something that's consistent. Okay, so here we go. We fill this imbalance right here. We tap into this level of demand on the 15-minute, which is our confirmation entry off the daily. And all we do is we go and target those highs above. As you can see, this demand, like I was saying, this little candle right here got stopped out. So if you would have had your stops right here, you would have gotten wicked out and price would have pushed up right after taking you out. So like I said, let your stop loss breathe. There's no reason going for 5, 6, 7, 8, 10-hour trades every single time you take a trade. Like I said, go for something that is consistent and will win, okay? And all you do is we target these highs. So this was the entry. We come down, we fill the 50% of this demand, and then we rip up, taking out these previous highs of the move, and that's it. This is very simple. It's not hard. It's doing the same thing every single day. A lot of people, they come into the charts and they try to force setups that aren't even there. They try to trade different strategies. Oh, my setup isn't here today. Let me trade a strategy that I've never traded before. I don't have the data backing it, and try to win. You're gonna lose. You're gonna lose the trade. Unfortunately, as bad as it sounds, you're gonna lose the trade, right? But losing isn't bad. You need to understand how to take a loss. You need to understand how to be a winner, right? By being a winner, it's by being a good loser. Read the book, The Best Loser Wins. It's going to teach you a lot about losing. Okay, not a lot of people can lose, and that is exactly why you're never going to win. Putting your stop loss 5 points from the entry, right? You're going to lose because you're trying to minimize your loss, when in reality, minimizing your loss is just lowering your lot size, lowering your contract size, lowering how much money you're putting in. You could have risked the same amount on this little candle right here as you can with this entire base of demand. You understand what I'm saying? So minimize your risk by actually letting your stop loss breathe and lowering the contract size. Stop trying to go for these home runs every single trade. You don't need to do it. And also find confirmation within your entries. Understand why you're taking this trade and have the data backing it. And that's it. If you guys need more help in your trading, click the link in the description below, fill out the form. We can jump on a call and I can help you personally. Hopefully you guys enjoyed this video. I'll see you guys in the next one.